Welcome to Insider Trading Signals. Today, we're diving into how we at Insider Compass filter the noise to discover the most important insider trades. Most insider trading headlines are simply noise because the majority of SEC Form 4 activity is routine. What truly matters in insider trading is context. We need to look beyond the surface-level headlines. We use a simple framework to filter for higher signal insider buying. It focuses on three key areas: the trade, the insider, and the company. Let's start by examining the trade itself, as the type and nature of the transaction tells us a lot. The best trades to look for are open market purchases, code P, made using personal funds. These often hold more significance than routine option exercises or scheduled selling. Also ask, is this behavior non-routine for this person? A first buy after a long gap can carry more information than small, recurring purchases. Next, consider the size of the purchase. It should be relative to what they already own and what they usually do. Pay attention to cluster buying. This is when two or more insiders buy within a short window, which reduces the odds of a random, one-off trade. Finally, look at the price context. Buying after weakness can show conviction, but the key is that the purchase looks deliberate and meaningful. Now let's turn our attention to the insider involved in the trade. The insider's role matters. Executives closest to financial results, such as CEOs and CFOs, often have better visibility into what's changing in the business. Track record is also crucial. Some insiders are consistently well-timed with their trades, while others are not. It helps to separate a real buy from mere optics. Does the purchase truly matter to the insider financially, or is it just for show? Our final piece of the framework is examining the company itself. Insider buys are often more informative when there are upcoming catalysts, such as earnings reports, regulatory decisions, new product cycles, or strategic events. Also consider whether the company has meaningful international revenue or global operations. In our research, insider trades at companies with at least 10% international revenue often carry more informational value. Global businesses tend to be more complex, less transparent, and harder for the market to fully price in real time. Insiders at these companies may have better visibility into regional demand, currency effects, regulatory developments, or overseas operations that aren't immediately obvious from public disclosures. As a result, discretionary insider buying at globally exposed companies can sometimes be more informative than similar trades at purely domestic firms. By applying this three-part framework, the trade, the insider, and the company, you can effectively filter for higher signal insider buying. If you want the full checklist and examples to deepen your understanding, visit insidercompass.com and read our guide, Insider Trading Signals. Remember, this content is for informational purposes only and not investment advice. Please consult your professional advisors before making any investment decisions.